Tom, why don't you just first start off by explaining how it is you are coming back to the public markets through a special purpose acquisition corporation. But if you can, just sort of explain to viewers how you're getting here and why you're here.
Sure. So this is the perfect time for Chuck E. Cheese to return to the public markets. We took our time as a private company to invest heavily in the business. We launched brand new food, we revitalized our entertainment, and our guests have rewarded us with that with great sustained sales growth. We are going the special purpose acquisition corporation route, the SPAC route, because Chuck E. Cheese is public market ready. We were publicly traded for many years. We have publicly traded debt today, and the process is much faster and less disruptive for the business.
Let's talk about the business itself. You said that over the last number of years, you've sort of retooled things. What has that meant, specific not just obviously to the food, but to the entertainment side, which is a larger portion of your revenues at your units?
Sure. So we have focused on bringing the best possible entertainment to kids and families overall, whether that's the great game assortments using great titles like Jurassic Park, or even kind of the classics like Skee Ball, making sure that it's a great destination. Our food with the new pizza that won national taste tests is making mom and dad happy to take the kids overall. But one thing that a great example is we just launched a new product at the end of last year called All You Can Play. And that is a time-based product. It's really a change to the business model of Chuck E. Cheese. Mom can come in and ask for points and tokens, or they can actually buy an hour block where their kid can play any and every game in the store. It's wonderful for the kids, and it's a gift to mom and dad because they have time certainty on the visit.
Right, so you know if it's 45 minutes or an hour. Are you seeing a big take-up in that, or are people sort of kind of eyeing it warily in terms of the pay-per-performance side, whether it's the efficient way to use their dollars?
It's been a fabulous reaction so far. We launched it as an option where you can buy tokens or time, and we immediately saw about 50% of our guests are choosing time. And what's more important is we use Net Promoter Scores like a lot of businesses. Over the past 6 months, we've had an all-time high in Net Promoter Scores, largely because of this offering.
Well, you've certainly showed some momentum in your same-store sales numbers. As recently ago as Q2 2018, up only 1%, now preliminarily at least up 7.7%. Do you believe you can continue to see those kinds of numbers?
We have some great things driving the growth going forward. In addition to All You Can Play, which I talked about, we have a remodel program. So far, we have 32 of our 515 stores remodeled. When we touch a store like that, it grows north of 12 percentage points better than their peers, which is terrific. And then also internationally, we've been growing at about a 25% CAGR, and we have a lot of white space internationally to open new locations.
Hey, Tom, what's the new store story like? And are you thinking differently as to where the new stores are most efficiently placed?
So we only are focused on a handful of stores domestically. We have explosive growth internationally, primarily in the Middle East and South America. But domestically, we're going to be using our capital dollars focused on these remodels to bring that extra excitement to moms and the kids coming in.
How different is that? I mean, I grew up going to birthday parties at Chuck E. Cheese's. Now you're appealing to a whole new generation of parents like me who have different tastes and different preferences for their kids. So how different does it feel?
It feels very different. So the great thing about Chuck E. Cheese is how popular we are with children. Your average kid has to come to Chuck E. Cheese 9 times a year. They only get to come 3 because we need to make sure that mom and dad are willing to drive them. So a lot of our investments have been to make it better for mom and dad. It feels more like a pizzeria when you come into our re-imaged stores with great food, sometimes open kitchens, and entertainment that is more pleasing to mom and dad.
What is so entertainment such as what that is more pleasing than it was previously?
So in the past, you might think about the Chuck E. Cheese, you have the video games, but then also in the past, you've had the animatronics, the robot Chuck E. Cheese that might be singing and dancing some of those songs that might stick in your head. We still have Chuck E. Cheese and the band do a lot of songs to make the kids happy, but we break it up with like Katy Perry, Taylor Swift, songs in there that give mom and dad a mental break and just make the atmosphere a little bit more adult without spoiling some of that magic that makes it the kid-focused business that it is.
As for your move to go public today, Tom, we were just talking about Pinterest. Lyft has been a big one. Levi's did quite well. Uber's coming next. I mean, how much were you watching this kind of environment in order to make the decision to go public right now?
Well, we are public ready today. Like, we've had publicly traded stock. We have publicly traded debt today. And given the overall momentum for our business, we really felt that this was the right time for us.
Apollo's still going to own, what, 51%, I believe, not selling at least at this point. But is there an expectation over time, given, of course, they're going to want to monetize their investment, that they will be a seller? And do you have anything to share with us on that?
Eventually, certainly, a private equity company will be a seller. But the great thing is we're all aligned in the growth aspects we have today. They believe in the business as much as I do, and that's why they're not selling a single share through this transaction.